Now, what about also for people who are retired? And I know that fixed income still counts as income, but what about people who have large reserves, say of cash, or maybe they're invested in equities or things that are relatively liquid but not producing a fixed income, and they want to take advantage of low mortgage rates and get a loan if they're going to be buying a property instead of, dissolving their investments and purchasing cash. Are there options for them, or are there other things that they need to do to get approved for something?
Well, there are. Fannie Mae has an asset liquidation qualification program, but it depends on what kind of asset it is. And I have to review that because I will tell you, in my 25 plus years in this business, I have never done an asset liquidation mortgage. So they're not that common. And the thousands of transactions that I've seen, so they're just not, at the risk of sounding like an old man. But Fannie Mae will count 70% of the asset divided by 360 as the monthly income for that. Okay. They also count retirement income, such as pensions, Social Security, disability, all those things. If you're receiving alimony or child support, they'll count those towards qualifying. However, we can't ask about alimony or child support unless it's being used to qualify you for a loan. So if you're receiving it and you don't want it disclosed, the loan officer can't ask for it. Okay, unless you're using it to, once again, unless you're using it to be qualified. The other thing, that if somebody is sitting on large reserves of cash, they may want to talk to their financial planner about doing an asset-based loan, because that's really cheap money. You don't have to go through the mortgage process. It's quick and easy. So I would recommend that as a good alternative to getting a mortgage. And usually the revenue, that the interest and dividends that those investments are paying off, exceed the cost of the money. So it's not a monthly cash flow drain, and it's a good alternative. That's something I don't do, but it's something I've seen. I don't do investments, I do debt. And then the other, and I just lost my train of thought. Can you believe that, Matt? And then the
You're
other
going somewhere good too.
the other alternative is a reverse mortgage. I don't do them. I know people that do them that are very good at it. And if you're a senior and there's cash flow issues, you can use a reverse mortgage to buy a house. You can also use a reverse mortgage to supplement your living costs. If you're in a home that you own free and clear and you need renovations for non-skid floors or handbars or lighting or things, ramps to make your house more livable, and you want to stay at home because you're disabled, that's an excellent product if it's originated by the right loan officer.
Right. I think that's the underlying kind of warning for everything, right? As long as you have the right loan officer helping you through the process, you're gonna do okay.
Correct. There's a lot of fraud in the reverse mortgage side, much more than on the regular mortgage side. So you have to be really careful.
Not surprised to hear that,
Yeah.
unfortunately.
When I say fraud, I don't mean that the loan may not be properly originated. I mean that the bad advice,
Right.
bad
Taking
advice.
advantage of somebody just to get a reverse mortgage,
Correct.
out there.
Correct. And there's loan officers and quote unquote financial planners who team up to try and churn seniors' money by encouraging them to do reverse mortgages. And it's a bad situation. So you have to be really careful.
Yeah.
And get the advice of a elder care attorney if you're going to go in that direction.
Yeah. Good advice. Good advice.